Okay, so uh, big news breaking today in global trade. It seems President Trump has actually started sending out those tariff letters we've all been anticipating.
That's right, targeting countries across East and Southeast Asia specifically.
Yeah, and this isn't just a minor adjustment, is it? It feels like a pretty significant move.
Absolutely. It's sending ripples, big ones, through the global economy.
So welcome everyone to the deep dive. This is where we take these, complex developments like these new tariff letters and really try to break them down for you, make them clear, understandable.
Our mission today is pretty focused.
Yeah.
We want to unpack these tariffs. Who's getting hit? What kind of rates are we talking about? And maybe the biggest question, why? Why these particular nations in East and Southeast Asia?
Exactly. Why are they in the crosshairs right now?
And we've pulled together information from quite a few places to get a handle on this. We're looking at insights from Asia Times, BBC, NHK, AP News, the Taipei Times,
Van Wharton Budget Model, Korea Herald, Straits Times.
Necessary, IMD, Brookings, even Harvard University. So quite a range of perspectives to guide us through.
Okay, so let's jump right in. The big question, as you said, the why. Why these specific countries? Why now? It seems to really stem from President Trump's fundamental view on economics, doesn't it?
Yeah, it's often described as this economics first philosophy. He tends to look at trade relationships through a pretty unique lens. Some analysts have called it a mix of victimhood syndrome and hegemonic swagger.
Victimhood syndrome and hegemonic swagger. Okay, what does that mean in practice?
It basically means he holds this core belief that the U.S. has been consistently, taken advantage of by its trading partners, that the system is sort of rigged against America.
And trade deficits are the smoking gun in his view.
Exactly. For him, a trade deficit isn't just an economic statistic. It's seen as, and I quote, irrefutable proof of cheating, of exploitation by other countries.
So it's not just about balancing the books.
No, it goes further. There's this expectation that the U.S. should be, quote, paid for providing what he sees as global public goods. Things like maintaining the dollar as the reserve currency or the security umbrella the U.S. provides.
Paid how? Through tariffs.
Tariffs are one way, yes. Or even direct payments into the U.S. Treasury. It essentially applies this economics first litmus test to everything, even long-standing security alliances. If a country isn't seen as paying its way economically, the relationship is questioned.
So is this approach something new, developed recently, or does it have deeper roots?
Oh, it definitely has deeper roots. This isn't a new playbook.
Yeah.
Many analysts point to a kind of 1980s worldview shaping his thinking.
The 1980s, you mean with Japan?
Precisely. Think back to when Japan's economy was booming, buying up American assets like Sony getting Columbia Studios, Mitsubishi buying Rockefeller Center. That really seemed to stick with him.
Right, I remember the concern back then.
Even back then, Trump was publicly calling for high tariffs against Japan. He felt the U.S. was being exploited. So this, let's call it a love of tariffs. It's been a consistent theme for decades. And it continues to shape his policies towards Asian allies like Japan and South Korea today. It's a very long-held conviction.
Okay, so there's the underlying philosophy, the historical perspective. But there must be a more immediate tactical reason for targeting East and Southeast Asia right now, right?
Yes, absolutely. And that brings us to supply chains. A big part of this is directly aimed at disrupting global supply chains and specifically trying to push companies to move production out of China.
He's been quite explicit about that, hasn't he?
Very explicit. As early as August 2019, he was telling U.S. firms to, quote, immediately start looking for an alternative to China.
And many companies did start looking, leading to this China plus one idea or friendshoring.
Exactly. Companies started diversifying. They didn't want all their eggs in the China basket. So they moved some production or maybe final assembly to other nearby countries. Places like Malaysia, Singapore, Vietnam became popular destinations.
Okay, so that sounds like what the administration wanted, diversifying away from China. So why target those countries now?
Well, here's the perceived catch, or what the administration seems to view as a kind of sleight of hand.
Okay.
The suspicion is that many companies moved the assembly part, but they were still using a lot of Chinese components. So products might be labeled made in Vietnam or made in Malaysia, but a significant portion of the value, the parts inside, still originated in China.
I see. So from the administration's perspective, This was a way for China to effectively bypass the initial tariffs, using these other countries as assembly hubs.
That appears to be the core argument, yes. It's seen as circumventing the original pressure on China. And that's a major reason why these specific East and Southeast Asian nations are now facing these tariffs. They're seen as facilitators, perhaps unwittingly, of this tariff avoidance.
Is there data to back that up, that
Yeah.
this shift was happening?
There is, actually. The numbers show a pretty interesting pattern. After the first round of tariffs on China, U.S. imports of intermediate goods, so parts and components from China, did drop.
Okay.
But at the same time, imports of those kinds of goods increased from a group of 13 other low-cost countries. That list includes places like Vietnam, Malaysia, Thailand, Indonesia, Cambodia, Bangladesh, the Philippines. Many of the countries now being targeted.
So the timing lines up. Component imports drop from China, rise from these other Asian countries.
Right. It strongly suggests that while final assembly might have moved, the reliance on Chinese inputs upstream didn't disappear entirely. It just shifted location for the final step. These new tariffs seem designed to address that specific flow, to close that perceived loophole.
Got it. Okay, that clarifies the why quite a bit.
Yeah.
So let's move to the what. What are the specifics of these tariffs we're seeing today? Remind us about the timeline.
Sure. So it kicked off publicly around April 2nd with that Liberation Day announcement. Very steep duties caused a lot of global jitters.
Right, and then there was a pause.
Yes, a 90-day pause on those really high rates, which is set to expire on July 9th. And that brings us to today, where these letters are reportedly going out detailing new, potentially higher rates that are supposed to take effect starting August 1st.
So the pause is ending and new rates are coming in. How many countries are we talking about and what kind of numbers?
Reports suggest as many as 12 letters might be going out. And the levies mentioned are quite varied. Some sources say they could range from, 60% or 70% tariffs down to 10 to 20%. It's not uniform.
Okay, and focusing on East and Southeast Asia, who are the key targets?
Well, we're seeing confirmed reports for some key players. Japan, for instance, is looking at 25% tariffs. That's actually up slightly from an initial 24%, and this is despite ongoing talks. There are even threats of potentially 35%.
Wow, even for a major ally like Japan.
Yes. South Korea is also confirmed at 25%. Malaysia is facing 25% as well.
And then some others are facing even higher rates.
It seems so. Laos is reportedly facing 40%. Vietnam, which is a really significant U.S. trading partner now, especially with that supply chain shift.
Right.
They were initially hit with 46% in that April announcement. They've reacted quickly, signing new trade deals, promising to buy more American goods.
And Cambodia, they were mentioned too.
Yes, Cambodia's story is quite stark. They were initially facing a massive 49% tariff. The latest letter seems to have adjusted that down to 36%. But still, for one of East Asia's poorest countries, heavily reliant on exports, 36% is incredibly tough. They're also emphasizing efforts to buy more U.S. products.
It's interesting, even Australia is on the list, isn't it? Despite being a close security ally and actually buying more from the U.S. than they sell to us.
That's right. They're making the case quite firmly that their rate should be zero.
Yeah.
It shows how broad the net is being cast here. It's not just about trade balances in some cases.
And we can't discuss tariffs without talking about China. What's the latest there? You faced a huge increase initially.
They certainly did. Back on April 9th, the U.S. hiked tariffs on Chinese goods to 125%, which, when added to existing ones, meant some imports faced a total tariff of 145%. The justification cited was Beijing's, quote, lack of respect for global markets.
But then there was a truce.
A temporary one, yes. It brought the rate down from that 145% level to 30% for 90 days. But, and this is important, Trump has publicly suggested that something like 80% might be the right long-term rate for China. So that 30% might just be a temporary pause in hostilities or a negotiation tactic.
Okay, so massive tariffs, complex motivations. What's the predicted fallout? What does this actually mean for the U.S. economy for people listening?
Well, the projections aren't pretty, frankly. Models like the one from Penn Wharton suggest these kinds of broad tariffs could seriously drag down the U.S. economy in the long run.
How seriously?
We're talking estimates like a potential 6% reduction in long-run U.S. GDP and maybe a 5% hit to wages.
Wow. 6% of GDP is huge. What does that translate to for an average family?
The same model calculated a potential lifetime loss of around $22,000 for a middle-income U.S. household. That's a significant chunk of change over a lifetime, isn't it?
That's substantial. So who bears the cost?
The analysis suggests, quote, almost every household is worse off. older households, even newborns, facing a lifetime of slightly lower economic potential. Because ultimately, tariffs act like a tax.
The tax paid by.
Initially, businesses might absorb some costs, maybe squeeze their margins, but over time, the evidence shows that the burden falls increasingly on consumers, on you, through higher prices.
Right, and that impacts everything else.
Exactly. It leads to less spending, which means businesses invest less in things like new equipment that can lower worker productivity and eventually even lead to fewer hours worked overall. It's a ripple effect.
And our company's already feeling this?
Oh, yes. We're seeing reports like Samsung Electronics estimating a huge drop, nearly 56%, in its recent quarterly operating profit. They specifically cited the sluggish chip market and U.S. trade policies. And you hear comments from industries like Japanese automakers, Mazda, for example, saying they're basically in survival mode, trying to navigate all this. It's creating real pressure.
So faced with this pressure, how are the targeted Asian countries responding? What are their strategies?
Well, for the Southeast Asian nations grouped under ASEAN, there's a clear move towards unity. They recognize they're stronger together.
Makes sense.
Malaysia's Prime Minister, Anwar Ibrahim, has been vocal about wanting to discuss these tariffs with Trump as a unified ASEAN bloc. They've set up a task force specifically for this, while also pursuing individual bilateral talks in parallel, trying multiple avenues.
It's such an interesting contrast, isn't it? The U.S. seems to be leaning more towards protectionism.
Well, much of Asia is actually moving in the opposite direction. You see generally pro-business governments there looking to increase trade openness, strengthen regional ties.
So the tariffs might actually be pushing them closer together and closer to China.
It seems that way. These tariffs are, somewhat ironically, accelerating trade between China and other emerging Asian economies. It's forcing them to deepen those regional supply chains and relationships.
And what about China's response? They're facing the steepest potential tariffs. How are they playing this?
China's position is really fascinating. Yes, these tariffs are undoubtedly painful for their export manufacturers, but the view from Beijing seems to be, one, that they can withstand it, and two, that this actually presents a, quote, generational strategic opportunity.
An opportunity to do what?
To potentially challenge and displace U.S. influence, U.S. hegemony in the long run.
Right.
They've reacted defiantly, dismissing Trump's initial moves as a joke and hitting back immediately with their own countermeasures.
Like raising their own tariffs.
Exactly. They matched the U.S. hike, raising their tariff against the U.S. to 125% as well. They're signaling they're ready for an all-out, high-intensity trade standoff, as some reports put it.
Do they feel they have leverage?
Yes.
The U.S. market is huge for them.
It is, but its relative importance has actually been shrinking. Back in 2018, the U.S. took almost 20% of China's total exports. By 2023, that was down to under 13%. China's been actively working to boost its own domestic demand and diversify its export markets.
Okay, so they're less reliant than they used to be, and they have ways to retaliate beyond tariffs.
Oh, definitely. They have some pretty pertinent tools. The big one is rare earth. China dominates that supply chain, providing something like 72% of U.S. imports.
And those are critical for tech, defense.
Everything from your phone to advanced weapons systems, that gives Beijing significant leverage. They can also target specific U.S. industries. Agriculture is a classic example.
Soybeans, poultry.
Exactly. Things that hurt politically sensitive areas in the U.S. They've already revoked import approvals for some U.S. soybean exporters, for example.
And what about American companies operating in China, like Apple or Tesla?
They're potentially vulnerable too. Beijing can use regulatory pressure inspections, licensing delays, things like that, to make life difficult for U.S. firms operating there. That can really squeeze profits.
So it's a multi-pronged response. Tariffs, rare earths, agriculture, regulatory pressure.
And building alternative alliances. We saw China, Japan, and South Korea hold their first trilateral economic dialogue in 5 years recently, specifically pledging to advance a three-way free trade agreement.
Interesting. Getting closer to U.S. allies.
And even the European Commission president joined China's premier in publicly condemning U.S. protectionism. So China is actively working diplomatic channels too.
So amidst all this, what are companies doing on the ground? How are they adapting their supply chains?
The big shift is thinking about resilience, not just cost or speed anymore. Companies are rethinking everything. Some are stockpiling goods to buffer against disruptions.
And that localization trend you mentioned?
Yes, that's becoming more common too. Look at the Chinese electric vehicle maker, BYD. They're building a factory in Hungary. Why? to serve the European market directly, potentially bypassing any future EU tariffs on Chinese EVs. It's about building production inside key markets.
It sounds like a fundamental reshaping of global trade flows.
It really is. And a major consequence of all this uncertainty, particularly around U.S. policy, is that many Asian economies are getting nervous.
Nervous about relying on the U.S.
Exactly. The lack of predictability is rattling. We're seeing reports that some are actively starting to distance themselves a bit, seeking stronger trade ties with China, with the EU. The perception is shifting. As one source put it, the U.S. is no longer seen by some trading partners as a safe haven for investment.
That's a pretty significant statement. A loss of confidence.
It reflects the level of disruption and uncertainty these policies are creating globally.
Well, we've certainly covered a lot of ground here. We've dug into the why behind these tariffs targeting East and Southeast Asia, that mix of long-held philosophy and specific concerns about supply chains.
We've looked at the specific countries and the range of tariffs they're facing, including the unique situation with China.
And we've explored the impacts, both the projected economic consequences for the U.S. and the diverse strategic responses we're seeing from nations and companies across Asia.
It really underscores that global trade is in a period of profound flux right now. Everyone, governments and businesses alike, is scrambling to adapt and reshape their strategies in the face of these pretty unprecedented pressures.
Hopefully this deep dive has given you, our listeners, a clearer picture of this complex and rapidly evolving economic landscape. Thanks for joining us.